Now, for our panel on Bitcoin, my former colleague, James Ray, is the Managing Director of Global Enterprise Solutions at Chase Commerce Solutions, an operating unit within JP Morgan Chase. In that role, James leads a diverse team of highly accomplished sales professionals to pursue, capture, and grow business relationships with industry leaders. Previously, James was a strategic advisor servicing a diverse number of clients, and in each one of these roles, James advised senior executives regarding organizational changes introduced by rapid growth, economic decline, and on the implementation of enabling technologies. So ladies and gentlemen, please help me welcome James Ray.
All right. Well, thank you, Maribel, for that introduction. I don't know what the entrance music was. For me, I'm unclear. The poll results, there they are over here. Niche innovation. That says a little bit about the crowd in terms of where you view BitPay, Bitcoin, and perhaps the broader cryptocurrency. But what says something else about you is you're all still here. So thank you for coming back after that break. So it seems that you have some interest in the topic for sure. And I guess they're not serving drinks until after the panel. So that was a good move, whoever planned the agenda. But we do appreciate you coming back. It's going to be a great, and I hope informative conversation for you. So when Tom Pierce, who assembled this panel, asked me to come and talk and really to moderate a panel, I said, but Tom, I don't know anything about Bitcoin. That was the first thing. Second thing is I work for JP Morgan Chase. Did you know that, Tom? He said, yeah, I know that. So I have a disclaimer, right? Any opinion I might express during this panel is clearly my own, not representative for JP Morgan Chase, have to do that. But the panel that he's brought forward each have a very unique perspective on cryptocurrency and Bitcoin in particular. And my job as the moderator ultimately is to make sure that they have an opportunity to share that perspective with you based upon their experience throughout the industry and to have a lively conversation from within their experience that helps you to understand their perspective. Ultimately, the goal is that you find something useful. You certainly, I hope, find topics that you can continue to discuss as we move out for cocktails. So that's the goal. So the shared understanding of the key concepts is the first thing we want to achieve. So the way this panel is going to work is I'm going to introduce the panelists and we're going to have a brief overview of what is Bitcoin. For many of you, you're well aware of what it is, but we want to establish a baseline knowledge so that everyone has the same vocabulary for the conversation, so it'll be more meaningful for you. And then each individual is going to be joining me on stage. We'll go through a number of questions that we've prepared. We may have time for Q&A from you, but that depends on how quickly we get through the panel. If you have a burning question, by all means, raise your hand. We do have microphones. They'll be brought to you so you can ask that question. So before we get started with the panel, I have a question. So what is the significance? Well, let me first ask this question. 2014 bowl season, NC State defeated the University of Central Florida by a score of 34-27. Now, whether you're an NC State fan or a University of Central Florida fan, does anyone know the significance of that game? Just raise your hand if you do. There's one or two people. It was the Bitcoin Bowl. The BitPay. No, it was the Bitcoin Bowl. It was sponsored by BitPay. And I think that the fact that they had it called the Bitcoin Bowl, even though advertising brought us Bit Boris during the Bitcoin Bowl, is sort of reflective of Tony, one of our panelists, the desire to really support the entire ecosystem and, of course, advance BitPay within it. So that is the significance of that game. Okay, so introducing our panelists who are coming from backstage. The first is Kimberly, also known as Kim Rhodes, and Kim's joining me on stage. And as she does so, just you've seen the biography within your panel. But I must say that having a master's, the JD from the University of Tulane, Juris Doctor JD, Perfect. Thank you. And I have to say, Kim has joined us back in the frozen tundra because last week, and in fact up until yesterday, she was at Playa del Carmen, relaxing on the beach. So we really appreciate you being here, Kim. Thanks for joining us today. Next up is Rod Garrett, who graduated from Cornell University, his PhD from Cornell University, and then he promptly moved to California and served on faculty at the University of California in Santa Barbara. And for some reason, he ended up back in New York. And we discussed that he hasn't sold his home in Santa Barbara. He's going back someday. So well played. And you may have noticed in the program, his specialty is in applied game theory. And he's very well known for his strategies of payment acceptance within the Federal Reserve Bank of New York. Next up is Sheila James. And she actually does believe it's balmy here in Atlanta because she's joining us from Toronto. She's the Vice President of Operations with Align Commerce. And she actually thinks it's pretty warm outside, so she's getting a bit of a vacation. And finally, Tony Galippi, who is the co-founder and the chairman of BitPay, and spends his time and his energy managing sales, marketing, et cetera. But most importantly, as I said before, he's a tireless advocate. Don't sit down, you're right up next. Tireless advocate for the entire ecosystem as it relates to Bitcoin. So with that, what we thought we would start with is an introductory 3 slides, I believe you have, just to level set all of us on what is Bitcoin and how is that different from cryptocurrency more broadly. So Tony, there's your clicker.
Thanks. I'm not going to ask a show of hands how many people have heard of Bitcoin, because I think by now you all have. But I do want to ask how many people have actually used the technology? Okay, maybe a few of you. So let's just talk real quick about what Bitcoin is. All right, so what is Bitcoin? The correct answer is actually 4 different things. At its lowest level, it is an open source protocol for the internet. It's designed to send messages back and forth for financial transactions in a financial ledger. We have other open source protocols for the internet. SMTP, for example, is a protocol for sending emails. HTTP is a protocol for requesting and viewing web pages. SMS is a protocol for sending text messages. Bitcoin at its lowest level is an open source protocol. Now, when you have different computers that are running this protocol, communicating with each other through their own communication channels, you create a network. We'll talk about the network in a minute. So when people refer to Bitcoin with a capital B, that typically refers to the network. Bitcoin is also a currency. So when I'm transferring value from one person to another, the unit of account is Bitcoin, and that's typically used with a lowercase b. Now, some people say, well, gee, why did you use the same name for both things? And some people think that maybe they should have called the unit of account a little bit different than the name of the network. But in its infancy, it does kind of help amplify the press coverage, because no matter which of these systems gets mentioned, it's always the same word. So that tends to help, I guess. When you put it all together, you end up with a global payment system. It is the only payment system that is fully digital and fully global out of the box. So real quick, talking about different types of networks, and I'm not trying to bore you here with a class on network architecture, but this is a very important distinction to make. So first you have centralized networks, and think of PayPal as a great example of this. PayPal has done a fantastic job of connecting person to person or person to business, but every transaction has to go through their central hub at PayPal, and PayPal has the master ledger of who owns what. So it works, but it's a single point of failure. The next one you should look at is the decentralized network. This kind of takes that hub and spoke system and expands it out, and this is how our banking system works today. It's also the way the postal service works today, where you have many hubs, and then out of those hubs are spokes. So if I'm a customer at one of the banks and I need to send money to a customer at a different bank, I need to get my hub to send it to that hub to that person. And if those two hubs don't have a direct relationship with each other, then there may be multiple hubs in between. Each one of those could add cost, risk, and time delay to the transaction. So that's a decentralized network. Distributed networks, this is how the internet works. There are servers that are connected together in a mesh network, And it's designed so that any particular server could go down and the traffic just routes around it. If you want to get from one point on the left of that graph to another point on the right, there's multiple paths that you can take. And if you're communicating packets back and forth, every time you do it, it may actually take a different path. The internet was designed that way by the Defense Department because they wanted it to be resistant to attacks from other nation states, right? We still needed to be able to communicate and share information without any single points of failure. So these are the three types of networks. Bitcoin is the first payment network that is fully distributed. There never has been anything like it that's worked, and we'll talk about why that's possible right now. So why is it important to have a distributed network? Well, this creates a very open platform that anybody around the world can build upon. Much like anybody can build on the internet, anybody can build applications on top of Bitcoin. So one of the first parts of it that's critical is a distributed ledger. So take the PayPal example. PayPal has a list of everybody's name and account identifier and a balance and a transaction to and from each account. Nobody else can see that, only PayPal can see that. However, what if we take that model and we turn it inside out? We give every single PayPal user the entire list of account identifiers and balances and transactions, but just no names. So you can see everybody's balance and everybody's to and from, you just don't know who owns each account. That's the way the distributed ledger works with Bitcoin. Everybody has a copy of every transaction and every balance. We just don't know who the people are. So what makes this secure, right? You take a ledger and you can make tens of thousands of copies of it all over the world. Everybody has a copy or has access to a copy. What happens if there's a discrepancy, right? Not every node agrees on what's valid and what's not. So let's say there is a discrepancy. Some group says, hey, this transaction is good. Other group says it's bad. Well, here you don't have a central manager that can step in and determine, a result. So one of the things that Bitcoin innovated is a distributed computing project. And so there are computers all over the world that are contributing a hash rate towards the winning solution. And in this case, the solution in which the majority of computing power is pointed at is the one that's going to win. So it's a consensus mechanism that can reach consensus on a disagreement in a completely distributed way. The chart that you see there just shows the amount of computing power that's been added to the network over the last 5 years. Each one of those major axes, this is a log scale, by the way, each one of those major axes is a 100x improvement, so 2 orders of magnitude. So we've gone through several different hardware cycles, and this is really a hardware problem. But what you end up with today is you have more computing power securing the Bitcoin network than every supercomputer on Earth combined. So it's nearly impossible for somebody to game the system now by gathering a majority share of the computing power. So what actually incentivizes people to contribute their computing power, or maybe even worse, go out and buy specialty computers to do this? Well, there's a reward. And this is one of the unique problems that Bitcoin solved, in that how do you introduce currency into circulation in a distributed system? So if you contribute your computing power, if you're part of the hash rate, then you are part of the reward. You're rewarded with units in the system. So it's like kind of a volunteer security force or a volunteer army where everybody is rewarded with units in the system. And so there's an incentive for everybody to cooperate and make the system work. The last chart here just shows you the number of transactions that have been taking place on the Bitcoin network since it started. So you guys can't see the time scale there, but that midway point where it really started to take off is around June or July of 2012. Where we're at now is doing about 100,000 transactions per day. And in a completely distributed system that's never been tried before, I think that's pretty darn good. The red line going across is at around 86,000, represents 1 transaction per second. So this network, in a completely decentralized or distributed manner, is doing one transaction per second worldwide, reaching a consensus with nobody in charge. Well, actually, that's not true. Everybody's in charge, right? All the people that are using it. How does this 1 transaction per second compare to other networks? Well, Western Union, even though they do a lot of manual by hand processing at retail locations, they do have a good website and a mobile app. Their average is around 7 transactions per second, right? So we're not doing anywhere close to what they're doing. The next one, PayPal, that we mentioned earlier, does over 100 transactions per second, maybe closer to 110. So there's a long way to go before this distributed network can scale to compete with that. Then the gold standard is Visa. On an average basis, they do 2,500 transactions per second, but surely during the holiday season, they do 10 times that much, right? Their network regularly does 20 to 25,000 transactions in a second. So there's a lot of people now, the really smart minds around Bitcoin are looking at Bitcoin and trying to figure out the scalability question, right? Can it scale? Can it scale from 1 to 10? And what would that look like? We don't have to solve that problem tomorrow, but probably in about 2-3 years, we'll have to have a solution for that problem. And again, the distributed network is still in beta. There are still issues that could come up with it, but people have been banging on it and trying to beat it up for the last 5 years, and so far they really haven't succeeded. So that's your overview of what is Bitcoin.
Well done. Please join me and applaud Tony for that excellent primer right there on Bitcoin. So thank you for that. And you did a great job of keeping the advocacy low. And Sheila did smile a little bit when you acknowledged the Western Union Network, having been a part of that. So she smiled a little bit. Your presentation prompts me to remember another sort of crowdsourced distributed computing project. And you've answered the reason why we have not yet found extraterrestrial intelligence. Do you guys remember SETI? You remember that? You could leave your computer on the internet and they would use your computing power to do some computation. You probably remember that. Mm-hmm. What was missing was the reward, I guess. The reward was missing, and that's why we haven't found it yet. I don't know. It's just something that occurred to me as he was talking. Okay, so cryptocurrency and Bitcoin, just in general, that's a great introduction for the crowd. I hope that was helpful for you. It was helpful for me. I'd like to hear from each of you, and we'll start with you, Kim, so you're on deck. We have heard a lot about the relative advantages of Bitcoin in terms of scalability, efficiency, and privacy. And so some would consider those advantages. And it's the distributed network that allows it to do all those things. But I'd like to ask each of you to be thinking about the answer to this question and your point of view. Is it relevant, or is it close to an accurate analogy to say that Bitcoin is to currency what email represented to the Postal Service? So to what extent do you agree or disagree with that statement?
Actually, I do want to start off by saying I'm the Director of Anti-Money Laundering Compliance for SunTrust Bank. The views that I express here today are my own personal views. They are not representative of SunTrust or its officers, directors, affiliates, et cetera, et cetera. This is just Kim.
Thank you for that.
So, it's difficult to say. I mean, from my perspective, doing what I do, and I'm, most people who know me know that I am very passionate about what I do. And the reason why is because I've seen over the years, I've been doing this since 2005, one of the longest standing AML directors at the same bank in the US. We live in dog years. But I've seen how effective it is. And what we're required to do as a financial institution is to know your customer well enough to know whether or not the transactions that they are doing through your institution could potentially be suspicious. And if so, to report it to the government. One of the concerns would be, how do you know your customer in this? And when we're talking about knowing your customer, it's more than just the fundamentals. The name, social security number, date of birth, those are the fundamentals. But also, who is that customer? What do they do? How are you going to know whether or not those transactions could potentially be suspicious if you don't know whether they're a dry cleaner or an arms dealer? Very different risk associated with them. So I don't know if I'm exactly answering your question, but it's a little bit of, that would be the struggle.
Right. So the notion that Bitcoin may represent a leap in terms of capability for currency might be true, but there are concerns, in particular as a financial institution. And I sort of hinted at it in terms of the privacy associated with those transactions makes it very difficult to know.
Of course, doing what I do, out of everything you said, the first thing that I honed in on was privacy. Right. And that's why institutions are sort of hesitant to dip the toe in the water. Right. Is because there's a reason why regulators take this so seriously. Right. And it's so important that banks and other financial institutions get it right, Because, I mean, I've personally seen the stuff that we have participated with law enforcement in catching, and it would make your hair stand on end.
Right.
It would absolutely make your hair stand on end.
Okay, we'll come back to some of those stories a little bit later. So next, Rod, if you would please also address the extent to which you think that there is this leap in the function of the platform we call currency. Is it analogous to email versus postal service? What are your thoughts?
Sure, and let me also say that the views that I would express are my own, not necessarily those of the Federal Reserve Bank of New York or the Federal Reserve System. So I guess just by way of background, I'm a vice president of the Money and Payment Studies function, and we do research related to payment issues and research on issues related to monetary policy implementation. But we also do analytic support for the markets group, for the wholesale product office, which operates the payment systems out of the New York Fed, and also analytic work to support the Federal Open Market Committee. So as part of my work at the Federal Reserve, I've been asked to basically monitor and understand what's going on in this with virtual currencies and understand what's going on with Bitcoin. So that's where I'm coming from. So in terms of the question that was posed, I think Bitcoin is obviously a very interesting innovation, but I think comparing it to using the email to regular mail analogy, I think is too big of a jump, because we're not sort of at a regular mail status in terms of regular payments. Payments are already fast, they're already electronic. The last session spent a long time talking about Apple Pay. So I don't think, for example, the leap from Apple Pay to Bitcoin is as big as the leap from regular mail to email, for example.
Okay.
So I think the question is, what are we comparing it to?
It's a fair response, I think. I mean, I taught junior achievement. I remember the Kingdom of Mocha. Anybody ever watch that video? And the leap to go from barter to clams to what we have today was a pretty big leap. But you're saying, hey, we've got a pretty mature system today, and perhaps it's true that there are some gains, but not nearly the quantum leap that might be implied. Is that fair?
Fair enough.
No, you can't counter him just yet. We're coming back to you. You're going to get your turn, because I know you have a different point of view, and we will get there.
Well, let me just elaborate on that one small bit.
Okay.
Not a quantum leap in terms of what it means for the consumer today. It is a huge leap in terms of how we think about doing payments.
Fair enough. Thank you, Rod. That might have taken his arm down right there. Is that?
No.
No, he's still there. All right. Well, I have to say that we're going to get to you. So, Sheila, same question, and I think the group knows your bio, but they don't know necessarily that you spent time in the telco industry and observed disruptive technology like voice over IP and what that did to the industry. And we're going to talk more about that with respect to regulation a bit later and what it implied. But that's important to know, because she's had the experience of being in a regulated industry, disruptive technology, seeing the industry fundamentally change, front row seat at Mitel and Nokia. So she had some pretty good insight to that, but then moved on to Western Union, which is why she smiled when Tony acknowledged that network. So Sheila, what is your point of view on that statement?
Yeah, so I guess I'm lucky that my point of view represents both my own point of view and that of Aligned Commerce
All right.
that I work for today. However, their opinion on email may differ. I've really never checked with them. So just to understand where I'm coming from, I work in an environment where we're moving business-to-business payments cross-border. So it's B2B payments, and we're doing it over cryptocurrency. So I think there's a lot of analogies, because what we're really using Bitcoin for is not really a currency per se, but we're using that blockchain that Tony explained before. So the blockchain, we're using it at both ends to move currency from one fiat to another fiat. And so when you look at the rail, there's many more analogies and parallels there between email. I mean, everyone keeps thinking about Bitcoin as the currency, but think of the rail, and then think of the email as the rail, as opposed to the traditional postal currency. And then what's happened with email? You have different vendors, you have different applications that have layered on top of it. So, I think that's where we have to draw the analogies, the rail, not the end currency.
A clear sign of intelligence. Reject the thesis and move to outside the box. I love that. Thank you for that. That's a valuable perspective for all of us. So you've been patient, Tony, and I know you haven't forgotten what you were going to say. So please, share with us your point of view.
First of all, for those who participated in the survey, the correct answer was A, significant advancement. I forgot to mention that. Because it is, and I think Sheila's exactly right, and Bitcoin is hands down the most efficient way to move money from point A to point B anywhere in the world. Now, what is at point A and what is at point B could be Bitcoin, dollars, euros, yen, gold, stocks, anything. So two things. I think that, there's a certain amount of friction in the banking system today that is going to be difficult to overcome, and that's the international wire or correspondent banking system, and she's well aware of this. Every time I go to my bank and say I need to send money to the UK or to Canada or to Australia, I ask them how long it's going to take. 2 to 3 days, but they got a holiday over there, and tomorrow's Friday, and it could be like 4 to 5 days. Everywhere I ask them where I can send money, I realize, I could fly there with cash faster than they can get my money there electronically. And in the age of the internet, that just doesn't work. And yes, we have faster payments. Yes, we have high volume payments, as we showed on the screen. Yeah. But this is just a transaction, right? These transactions do not clear and settle at that rate. Bitcoin clears and settles when the payment is done. What's the settling time for a credit card? Well, it's still a couple of days. It's usually settled by ACH. So for the first time with Bitcoin, we have an electronic transaction that can settle with no counterparty risk. And that can happen instantly anywhere in the world. So this can enable new types of payments that have never been possible before. Cross-border payments, automated payments, micro payments, even things like metering, that we haven't even been able to do effectively. Right. So yeah, I think it is a significant advancement. And just to get back to Kim's point, BitPay, we are a financial institution. We're registered with FinCEN as a money service business. We have a very strong AML policy. We vet every single merchant when they sign up. We know who they are, what they're selling. We collect documentation on them, and we have a risk-based approach on what kind of limits we're going to let them put through our system. And then those limits are enforced by a computer. You can't do over your limit. And so there's certainly a lot of things that we do. And we look at the regulations around Bitcoin, and much of them are similar to how we protect money laundering with physical cash. For example, if you're Starbucks and somebody wants to come in with a $5 bill and buy a coffee, you can sell it to them. You don't have to ask them for their name, address, social security number, and date of birth. And that's kind of nice as a privacy protection measure. You don't want to do that every time you buy a pack of gum or a coffee. But there are certain thresholds where if a transaction is over a certain amount, then the record-keeping requirement kicks in.
Right.
And I can't just go into an auto dealer with a bag full of $30,000 in cash and expect to buy a car without giving my name. And so there are levels that are really set to minimize and try to deter money laundering, and we certainly don't want those people in our system. So that's why we set our limits appropriately. And I think on the regulatory side, I think people say Bitcoin is not regulated. Well, it is. I mean, FinCEN came out with guidance, and so did the IRS, and right. These are federal rules that we can follow.
So you feel you're complying with the regulations. You're just introducing new capabilities within that set.
Correct.
Maybe a little overstated, but.
And there's new capabilities that were never possible before.
Okay.
So if you're looking at a law on the books that is designed around, well, what do we know? It can't anticipate what you don't know.
And I definitely want to come back to that point of view, particularly as it relates to telco. But before I do, I want to come back to Kim and ask about, as he described that compliance with existing regulation, as the head of anti-money laundering for a super regional financial institution, could you describe how close do you think we are to being able to regulate this exchange that way?
Okay, well, I can talk about from a bank's perspective.
Yeah.
We are responsible. The expectations are increasing exponentially, and anyone who reads the papers, I'm sure you've seen the fines for not getting it right are now into the billions of dollars with a B. It is literally franchise threatening if you don't get it right. And once again, the reason why the regulators are taking it so seriously is because it's such an effective tool. When I say expectations are increasing, we're expected to know not just our customer, but our customer's customer. So, for example, if my bank or a bank is providing services to another bank, and that other bank is running their customers' transactions through my bank, I need to know not just my customer, but their customers to be able to detect whether or not those folks downstream are doing things ultimately through my bank that they shouldn't be doing so that I can report the activity. So what we're talking about really is infrastructure. When we're talking about infrastructure, we're talking about people who have the expertise and qualifications to be able to come in and analyze activity, to set the programs up. You're talking about technology, which is not cheap and in most banks, not easy to implement. You're talking about processes. It's an inordinate amount of infrastructure. And so basically banks are in a position where they're having to make risk-based decisions on who can I bank and who can I just not afford to bank. You know, ultimately we're a business, and we have to look at something and say, if it's going to cost X amount to be able to build out all of this infrastructure, and even then at the end, we still might not be able to get it perfect and there's going to be residual risk. You know, are we going to make enough off of this client segment to be able to afford all of this? So that's really kind of the fundamental question that we end up with.
Very good.
It's not sort of a, gee, we don't like you, at all.
Right.
This is a very expensive proposition.
Excellent, thank you for that. And Rod, I'll ask you similar questions. So the compliance with regulation, Kim addressed it from the bank regulation, particularly the anti-money laundering compliance. What other regulatory compliance is going to be necessary before it's acceptable from a regulatory standpoint for these virtual currencies to be mainstream?
I'm not going to talk about possible new rules because that's not the role not my role.
No, not rules.
I mean,
yeah.
Basically, I think we're just expecting these companies to abide by the existing rules to the extent that they apply.
Okay.
That's the first step. And then other agencies are sort of looking into what additional regulations are required. For example, the DFS in New York has taken actions to try and outline a regulatory framework for money transmitters in New York State. Other states are doing the same because this is a state regulatory issue. And apart from that, I don't really have anything to add.
Okay. So other agencies, like perhaps Revenue Service, might have regulations for transparency that aren't set by the Federal Reserve.
Well, the IRS made a statement last year, basically, in which they declared or identified virtual currencies as commodities instead of currencies, which had certain tax implications.
Right. Okay. Thank you. And Sheila, I want to come back to this notion of infrastructure because I too worked in the telco industry. I was with AT&T during the time when Bell Labs came up with CD quality sound transmission over the internet. And yet AT&T, some of you may work for AT&T or have worked for AT&T, really rejected that disruption because the logical reason was they didn't think that consumers would accept the level of quality that transmission would provide for long-distance phone service. That was the statement given. But ultimately, it turns out that people were happy to embrace Vonage or any other company who was willing to use that technology for transmission of voice. And so we've had this conversation about how a disruptive technology can't on its own force legacy or incumbents to adapt to that technology, but the market can certainly do something about it. And so I'd love to hear your points of view, having observed that firsthand, the introduction of voice over IP technology, and then as we've discussed earlier, the notion of there is still regulatory compliance even with those technologies and how that might apply to virtual currency.
Yeah, so having had the benefit of being on the bleeding edge of two technologies, when I was in the voice over IP space, this is early 90s actually, so it wasn't actually called voice over IP, we started with voice on the LAN. And it's interesting when you sort of look at the early adopters because, you know, many here have probably used Skype and you've maybe used Skype for local calls or long distance calls, and that may be how you're interpreting it now. But there's also a good chance that when you go to the office, if you have a laptop, you're plugging your laptop into the back of your telephone now, not your telephone plugging into your laptop. And there's a good chance that the telephone calls that you're making are all little bits moving on broadband, whether it's overseas. And when you look at kind of the areas that were adopting these technologies much more quickly, in Europe you had and in the US, all of the CLECs who were challenging the incumbent telcos, and they were going and they were adopting the voice over IP technology to be able to offer very similar services. So, there's been an evolution of how voice over IP has been regulated, and even today, at a consumer level, it's regulated very different country to country. So you can have something like Skype, and for a Skype in the US, it's not required, for example, that they provide calling line ID service or 911 service, because they're not being viewed as a telco product, it's being viewed as this internet application. But if you have a telco provider go and provide a voice over IP service that's now servicing someone into their home, that voice over IP service that they're providing, not to name any particular provider's proprietary product, but they're likely mandated to have to provide 911 service and calling line ID service. So I understand the challenge that the banks face, and banks are regulated, rightly so, under government regulations. But the same type of things evolved within regulations in the voice over IP space. And there are countries that are coming out regulatory-wise with regards to Bitcoin and starting to have opinions. But this is still in its very early days, right? So they're trying to figure it out. But you can go to Australia and have a sales tax on a Bitcoin sale. So it's not about viewing it as a currency, but as a service, and I'm going to go and tax this service. So, there's very interesting ways in which those two industries have evolved. And once again, look at the infrastructure again of voice over IP. Where did it start to get adopted? Going between telcos, going between CLECs, and then companies and businesses that are adopting it, first in their own controlled environments, and then business to business and cross-border business to business, where they've put these big T1 spans. And then consumers start adopting it, not just the consumers who are adopting it initially novelly, but regular everyday people who are having conversation on Skype and on FaceTime and on all these applications. So I think there's lots of analogies to be looked at in these two industries in terms of how they'll play out.
Fantastic, thank you. And I think I take away from that the notion that the incumbents will evolve, regulations will evolve, and new business models will emerge that help to drive and shape that regulation and that evolution. So Tony, we're back to you. I'd love to hear from you to start this next section on what are the opportunities for improving the efficiency, improving on our existing systems of payments. And so, Rod, we've had this discussion that there are claims about how great an advantage it will be and so forth. And I'm really curious to hear from each of you, just in random order this time. But Tony, we'll start with you. What do you think are the most immediate opportunities for us to improve upon our current payment systems? You alluded to some of them in your overview, but I'd like to hear.
Well, some of them can be improved and some of them may not be. Most of the payment systems we use today, the credit card system was built in the 1950s. ACH was built in the 1970s. Both of them were before the internet.
Right.
And they didn't take into account the internet. Now, there are some things that you can do to them to improve them. So I look at really three things that in terms of the underlying benefits of a Bitcoin transaction that possibly could be applied to other payments. Number one is the speed of transactions, and it's not just the speed of the transaction itself, it's the speed of the clearing and settlement. Number two, the security of the transaction, right? How secure is it? And then my brain's going, I missed the third one.
Okay, well, important distinction of the speed of the transaction versus the settlement.
Speed of the settlement, yeah.
Is the first one you
Oh,
go.
the certainty. It's
Okay.
and the settlement is the certainty. So yes, credit cards can run a heck of a lot of volume and transactions. It's very fast when you pay, but there's a dispute resolution period. The merchant doesn't really know for up to 90 days later whether they're going to keep that money that they just earned. And when you look at e-commerce, which is the fastest growing part of most retailers' business, there's a whole issue with the card not present. Again, trying to use a credit card on the internet where it was never designed, that it opens it up to a lot of fraud. And so if you're a retailer online and you're selling somebody a computer or a television that they just paid you, you're going to ship them that merchandise, but you're really going to be crossing your fingers for the next 90 days that it actually was that legitimate person. Right. Because if those credit cards had been stolen credentials, or if it really is the guy and he's just lying, he's going to file a dispute, and you're more than likely going to lose that argument and have to give that money back. Why? Because you didn't get a signature. And all the rules around dispute resolution, which were built in the 1960s, say that in order to counter a dispute, you have to have a signature. Well, I collected 200 data points. I have his IP address. I have his device ID. Doesn't matter. Did you get a signature? No. And so I think that there's going to be an opportunity to improve the security of some payments by looking at the cryptography around Bitcoin. But the payments themselves have to become more push-oriented and not pull. Because to take advantage of all the capabilities that Bitcoin can offer with its security and cryptography, the sender has to originate and compose this transaction and push it to the recipient. That's what makes it irreversible, that's what makes it fast, and that's what makes it settle with no counterparty risk. Anytime you have the recipient pull money from you, you're open for dispute. So just like I can't pull an email from you and show it to somebody, say, hey, James wrote me this email, says, look, that Tony's a great guy, right? Only you can compose that and push it to me, and you may have to sign it with a key to prove that it came from you. So I think that if the payments industry were to look at more push-type payments, ACH is a push, for example. Visa has push-type transactions, OCT. They might be able to take advantage of some of the cryptography around Bitcoin to make those more friendly, but they're just not widely used today. I think they're the most underutilized parts of both the ACH system and Visa, and I don't know why.
Okay, thank you. Other thoughts from the rest of the panel in terms of where are there opportunities to improve upon current systems that you would note? Rod?
Well, I guess I just point out that in January, the Federal Reserve published its strategies for payment systems improvements document, which people could look at, where they, as part of a process to think about how they could improve existing payment platforms, they did outreach to for public comment and tried to find out what the issues were that people cared about, which is, I think, one of the first steps to sort of making an improvement. Some of these issues that Tony just mentioned were there. People don't want to give away their information when they make a payment. And Apple Pay is something that uses existing payment platforms and helps solve that problem. But in terms of speed and efficiency, these are issues that are mentioned in the report, as well as increased collaboration between different payments platforms. So many things that are sort of in the scope of what Tony's talking about that Bitcoin achieves that the Federal Reserve System is working towards achieving within existing payment infrastructures.
That's great stuff.
I can say from the banking standpoint, one of the things
Please.
that when we're talking about wires, for example, one of the things that at least slows things down, OFAC scanning. I don't know how you guys are accomplishing OFAC scanning, but we have, just an inordinate, and just to brief folks who are not, OFAC is the Office of Foreign Assets Control. And basically, this is our government's list of bad guy countries who we should not be doing business with, and then also individuals. We call them specially designated nationals. It's a list of about, and it keeps going up. Right now, it's over 100,000 people and entities on this list. And financial institutions are required to, before you process a transaction, you have to scan the sender and the receiver on these lists to make sure they're not from a bad guy country and it's not one of these specially designated nationals. And that list changes all the time. Guys get added, guys come off. When I first moved into the role, I'm like, how do you come off? Do you wake up one day and decide I'm not going to be a drug kingpin anymore? And then a friend of mine said, well, no, they don't exactly have a long life expectancy. I said, oh, okay. But this is a long list. And when you're scanning, you have to look for, okay, Kim Rhodes. is on the list. Was it Kim Rhodes from Atlanta, Georgia, who we all know is a notorious bad guy? Or is it Kim Rhodes from Yemen, who we know is perfectly fine? You know, it's trying to figure out, do you have the right Kim Rhodes? And so, once again, I know in the banking world, it's a struggle because the bad guys think it's really funny to name their ships things that are really common, like Mary. So Mary catches in the filter all the time, and then we have to have people work to figure out, is it Mary the ship? Is it Mary a person? Is it? So when we're talking about speed, how are you dealing with OFAC?
There is an API that we've developed. We can ping OFAC or a service that checks it and get a response usually between 5 and 15 seconds. So we can do it. We do it every time somebody signs up, and then once a week we check our entire database of active customers. So it can be automated, but you're right. You know, what if you get a false positive? And we get a lot of false positives, right? Now we don't deal with ships and vessels, so we can at least ignore that one. But you know, there's a lot of common names that are on the list, right? And so then you have to identify. Well, you know, you can look at the address or the date of birth to figure out if it's anywhere close to the person that you're doing. So yeah, we have a compliance team, and they get out you know, potential OFAC hits, and they look at it, and it's 90% of the ones that come back as possible or not. Actually, probably more than that.
Yeah.
But yeah, I mean, you can automate that. We do it during onboarding and we do it during auditing. So it's not like you're manually looking on a list.
Yeah, no. I mean, ours is automated as well, but still, it's the number of things that hit.
Takes effort.
That you have to work.
Yes. Yeah. Great illustration. And Sheila, if you would just final comment on that topic. We're going to move on to the next one. But when we prepped for this, you talked a little bit about cross-border in particular, some of the advantages of this infrastructure as you've described it. What are some of the advantages of the infrastructure that might be used to address some of these issues?
Yeah, actually, this morning, Kelly had a conversation about procurement innovation. And, you know, if anything was going on in that space, and there wasn't too many answers at that point in time. But when you look at, you know, how are these businesses sending funds cross-border right now, the most common way they're sending the funds is wire transfer. And so when you think about the friction of the wire transfer, whether they are physically having to go somewhere to initiate the wire transfer or initiating it via their bank, and then they push the funds out, sometimes very large amount of funds, and they're really not sure where those funds are at any given point in time until the person at the other end receives them. So there's very little trackability, or this is not as good as FedEx. You do not know where your shipment is, and you're hoping it's going to, you know, end up at the right spot, but you can't be sure. And then what's interesting is you pack up one thing and you ship it off, and when it gets to the other end, it's not what the person was expecting. And they have to somehow reconcile it. So, you know, when you look at the existing infrastructure, the funds that make it to one side, it's not the same dollar amount they're expecting. The fees have come out from either sending or receiving banks, maybe correspondent banks have taken a cut along the way. Now they've got a different dollar amount that's come. They don't even know how to reconcile it. FX has changed, and now they've got another bill going back. You know, when the receiving business has accepted funds, they don't give the overage back to the guy who's paying, but if it's come out under, they're now sending them another bill, and the whole cycle starts again. So when we talk to businesses, and you know, we talk to businesses who are doing, you know, servicing out of the Philippines to the US, or European and US companies that are doing goods sales, you know, these are legitimate problems for these small and medium-sized businesses who, you know, really don't have a convenient, trackable, reconcilable, quick way to move money across these borders.
Sounds like you're an advocate for this, and I know you're shaking your head. That's the what did you call it? Third thing? Certainty?
Certainty.
Mm-hmm.
Certainty, right there, illustrated. Thank you. We are nearing the end of our panel, so I want to ask you all just an open question, and whenever you're ready, popcorn style. Pop. You have an audience of folks who are in the industry, and you have a stage. I'd love to hear from you what you think are the most important things that need to be put in place by the industry, by our regulatory authorities, or within technology, but what each of you think to achieve widespread acceptance of Bitcoin or virtual currencies. So I'll start with you because I know you've got 5, and I'm going to ask you for the first one, and then we'll go to the rest of the group.
I think to get widespread adoption of it, you need to make it as invisible as possible to the end user, right? Give them the advantages of the speed, security, and certainty without actually having them to handle Bitcoin at all, right? They have a wallet, it's got dollars or euros in it, and magically if they want to send money to somebody else on the other side of the globe, their wallet just buys however many Bitcoins it needs and sends it. The recipient can sell them right away. So Sheila's service kind of does that as a service, but maybe people could do that themselves as well for small amounts.
Very good. To make it as invisible as we don't think about it. Like today, we plug into the wall. We know electricity is going to be there most of the time, right? Anyone? I'm not going to go in sequence. This is your time. Kim? You're leaning.
So all right. For me, it's every time, when you say Bitcoin, the first thing that comes to my mind is anonymity.
Okay.
And until, and whether or not that's reality or perception, until that perception is, people are, I think Silk Road, I think until that perception is overcome, I think that there is going to be, at least from a bank standpoint, and I'm always thinking about, are you banking the exchangers and the issuers, et cetera, there's going to be some hesitancy.
So there needs to be greater transparency into the giver, the recipient, and so forth, back to compliance with anti-money laundering. So,
yeah. And like I said, I always think about it from the perspective of, are we banking this client type, right? And when we're talking about banking a client type, we're looking at, so for example, if we were banking you, I would have to become intimately familiar with your program. I would have to go through and make sure you had all the controls in there. And then I would have to go out and test your controls and make sure, that's kind of where we've gotten in the industry now. And that's a lot of infrastructure to build out.
Okay.
Yep, that's what our bank does.
Build out infrastructure, okay. Rod or Sheila, either of you?
Yeah, I think, there's going to be a maturity of the infrastructure, and believe me, there is significant money being poured into this industry in terms of trying to understand, cryptocurrency as a whole, and it doesn't even have to be Bitcoin. So you have this underlying infrastructure that will become hardened, and then what are the novel applications that are going to be layered on top of it? For those applications to be widely adapted, and for people to accept them, they need to come with security. They're going to have to come with risk-based compliance and AML procedures and whatever else you need. So those pieces are going to mature, and it's about the developers of the application, and it will become a more hardened industry even as banks and as other folks in the environment start to adapt it. That's what will pull it into a more mature industry.
Okay. Thank you. Rod, last word.
I'm not sure what's needed for wide-scale adoption. I think what's probably needed is for someone to find that thing that it's really good at. I think when people talk about remittances, that is certainly an area where regular payments could use some improvement, and maybe that's an area where things can work. When people talk about Bitcoin being sort of a free way to make international payments, that's sort of true if people transacted in Bitcoin, but by and large they don't. We've still got to make a wire payment from my bank in cash to the Bitcoin exchange who's going to send the Bitcoin, and then maybe there's another transfer from the Bitcoin exchange in the foreign country to convert the currency to the local recipient. So this stuff has to be worked out, and maybe that's an area that will lead to a lot of growth. And as I said, it is an area that could use some improvement. And as I said, we're working to try and improve existing payments in that direction. People have talked about the idea that maybe there's some killer app, something that'll come out there and really sort of spur use of it. What I'm trying to get at is that I don't see the area where it's really necessary. People have Tony's pointed to some areas where payments may be deficient, but we all got here probably without using Bitcoin, and we're going to get home without using Bitcoin. And that doesn't mean that Bitcoin can't be useful, but for it to sort of become widespread, I think we have to find that really important usage that isn't met in a reasonable, practical way. One area that I think is most promising are the micropayments. And the reason I like the micropayments more so maybe than the idea of the remittance business, is because as I said with remittances, you have to cash in and you have to cash out, and that adds costs that aren't often mentioned. But the nice thing about micropayments is that you can make these micropayments, you can collect them, and the cash in and cash out doesn't have to occur every time. So I do think that's really promising, and that could be one of the areas that could lead to use. Now, when I say or widespread use, we're not talking about it taking over existing currencies. We're just saying, is there a room for it in the marketplace? And certainly I think there is.
Excellent. That was a great summation by all of you. So what we need is a mature infrastructure that's well taken care of and utilized effectively to do something really good. You've given us a couple of ideas, so micropayments, that is invisible to the user but transparent enough for the regulator. That pretty much sums it up, I think. We are at the end of our time. I want to thank you all. I look around the room and there are a lot of heads that are up and looking as opposed to looking down at BlackBerries. Thank you for that. And Tom Pierce, wherever you are, thanks for drawing such a wonderful panel of experts. Thank you.